Good morning, good afternoon, good evening. Welcome to the Playbook of the Wealthy podcast. My name is Dave Grant. My co-host is Heather Townsend, and you would not believe that this is take 4 of the intro. Welcome. So today we are talking about setting yourself up for a wealthy 2025. But it's the Growing Your Wealth episode, and it's not for retirees. That's next time. If you are new to our podcast, we split it up into 4 segments. You're going to get to know us professionally, personally. We're going to talk about content in a deep way, and then we're going to answer some questions. Before we move on, you got to pause the video or the podcast. You got to like, comment, subscribe, follow, whichever button is applicable to the way you're listening to this. We are a financial podcast, so I do have disclaimers, and here they go. All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast. Woo! Thank you for sticking around this far. Next episode, that's going to be like a drug disclaimer when you see it in commercials. It's going to be so fast. Blink and you'll miss it.
3x. Okay, done.
Okay. Our first segment of the podcast is called How You Doing, dedicated to the one and only Joey Tribbiani from Friends. So Heather, how you doing?
All right. I'm doing great. Thank you for asking. How does he say good, by the way?
How does Joey Tribbiani say good?
And does he never respond to his question? How you doing?
No, he always asks girls, and then the girls just like turn into a puddle on the floor. It's like, It's a pickup line.
Got it. Okay. So I actually was on like cloud 9. I came into this week on top of things, only had 3 things on my to-do list, which is very rare. And then my kids got pink eye and we had to go pick them up from school early. And they've now been home for the past 2.5 days. And now my to-do list is too long. And I'm just at a point where I think this is comical because this is not the first time it happens. Every time I'm the groundhog that pokes out her head and goes, I'm on top of things. Boom. Something happens. I don't know what the universe is trying to teach me. I don't know. But yeah. So, but I'm accepting and I'm grateful. We'll talk positive, but it is frustrating.
Shall I tell you how this works 10 years from now? Because this was my situation yesterday. So Chicago hit -18 with wind chill. School's canceled, except my wife's, who's in a different county. So they kept theirs open. She goes off to school. I look at my kids. One's a freshman in high school. He has e-learning. I'm like, go do your work. I don't care what you do after that. You earn a free day if you do it quickly and well. I look at my 6th grader who has no school, no e-learning. I'm like, I expect you to sleep in and I expect you to play 6 hours of video games because you're not stepping foot outside the house. It's too cold and I have to work. If we can all agree to that, that's a successful day. Let's go.
Yeah, that sounds great. Right now, I have 2 little ones that can't feed themselves, can't wipe their own butts, we could keep going on and on. So, but that sounds blissful. I like it 10 years from now. Sounds a lot more possible. They can't even turn the TV on by themselves yet.
Yeah, there's stuff to look forward to. It changes. I mean, I'm sure you're dealing with 3.5 girl attitude. I'm dealing with teenage boy attitude. It's slightly different.
Yeah, different problems, different time. Yes. So how you doing?
Professionally, this has been a fun week. Like for those people who are listening or viewing who they're not in our inner circle. We've been doing stuff for this for months. Now we really get a chance to promote it as much as we can. And we are, releasing snippets of videos, sending it out to our friends, doing all this promotional stuff. And that's where it becomes fun because then we start to get real feedback, good and bad. And it's not just in our own little cocooned bubble of we're making this project and no one can know about it because we haven't launched it.
Bad.
So it's bad. A fun time.
Bad? You know what bad? What do you mean bad? You've had bad feedback?
No.
Are you just trying to
The one comment I have is someone kept saying, "Do you have to say that disclaimer every time?" Like,
Yes.
yes,
Okay. Yeah, we do. I
every
know.
single episode.
We
You're
should
not the only
3x
one who
it.
finds it annoying.
Yeah, we should 3x it. That's fair. Okay. I know you are
All
very
right,
excited for this. We are here. We have arrived, Dave. We have arrived. We are live.
this is it. It's real
This is
now.
it. I know. I know. I know.
All right, enough about us. Let's talk about setting yourself up for Wealthy 2025. This is our next segment. It's called Let's Dive In. Where would you start?
Where would I start? I always start big and then go into the details. I never start with the details and then you go big. I think that's more confusing. So I start big view and I start with, what did we accomplish last year? What went well? What didn't? What do we want to accomplish this year? What are the goals this year? Where is income? Where is net worth? Where are we trying to go? And then we go into the details from there. But those are normally the questions I start asking.
Okay. Break it down personal. What's one of your goals this year as a family?
As a family, more spaciousness. So, and that ties into delegating more, right? So I have to offload when you go into the details. So the bigger is spaciousness. Well, what's going to take that? Well, we need more time. That means I have to buy back my time. And then you drill down into, what are you going to offload? What's that going to cost? How does that look into the cash flow? Da, 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 da.
Nice. Yeah, ours is similar. We're talking about physical space in our house. Like ours is, we would like to move this year. That's a big goal of let's get more space. Let's figure out what do our boys need as they grow, if they want to have friends, yada, yada, yada. This house does not fit the 5 and 3-year-old that we moved here with. Then it breaks down into, okay, well, what do we need to do to list our house? What do we need to do to buy our house? And all those little breakdown steps of, great, now I have to prep a house for sale. And then you start questioning your decision. Like, do I really want to do this? Because that list of things keeps growing.
I know, but it's kind of funny when you talk about this. We are in such different phases, but I'm going to be there. I know it's coming when the girls hit middle school, and I'm right where you are. That's a big one. The other thing is I go into with clients, what is income looking like for this year? I think that's like a really big thing going into this year, because knowing what clients' income is, then I know what their expenses are. Then we know what their goals are. Can they complete it, or do they need to make more? Also, what tax bracket are we expecting them to be in today? Because for me, at least, when you're in asset accumulation, knowing what tax bracket you're projected to be in tells me how I prioritize saving and where I put it in what buckets, right? So, I don't know where you are, but definitely when clients are in the 32% and above, I am all pre-tax. I'm max out every tax deduction you absolutely can. So max out pre-tax employee, which 2025 is now 23.5. There's 7,500 catch up. So I think the max is now, what is that, 31? Did I do that math right? Yeah. Oh, and can we just talk about this really quick? How about the weird Secure Act? Was it 2.0 for ages 61 through 63? Is it, you can do a special catch up instead of 7,500 of 11,000? Is it 250, Dave? I have to read.
I would need to look those limits. I don't have anyone who's done it yet, but it's one of those weird things of why?
I don't know.
It was working.
I know. So just so you know, if you are ages 61 through 63, you might have a special catch up that you can do. Let's just make the tax code a little more complicated, but yes. And then, HSA I would probably do. If clients are in 24 and below, it gets interesting what I recommend. It's not as cut and dry. Are you the same?
Yeah. If I've got someone who's a teacher who's going to get a big pension in retirement, I'm giving them a different piece of advice than someone who is same income but doesn't have a pension in retirement.
Is our teacher's
the tax
pension
brackets will be different?
Yeah, are teachers' pensions similar to traditional IRA, like they're taxable, like ordinary income tax rates?
Yes.
Okay. Yeah. So then I might think like Roth in that case, right? For them or brokerage. Yeah.
Yep. Yeah,
Yeah.
it's very different because I mean pensions in Illinois are big. That's why the pensions in such a problem. So then it becomes okay. What are we looking at? Are we doing Roth? Are we doing taxable? Do you still need to defer income if your spouse is still earning a high wage? Like where are we at here? It's very case by case basis.
Yeah. If I think my clients are going to be in the pretty much 24% and below tax bracket, I might split 401k contributions 50-50 pre-tax Roth.
Mm-hmm.
Especially if I think they're going to be in higher tax brackets in the future. Or if I know this is their one income year where they're going to be low, I might go all Roth, right? And then you go pre-tax. So I think really knowing what tax bracket you could be in this year and really, so what income really starts mapping out the plan of what you're going to do for 401k savings, what you prioritize.
Yep.
And speaking to your CPA, like if you're going to make more, I just have to say, when when you get your tax return this year, everyone, and the CPA spits out those lovely estimated tax vouchers, please know that that is based on prior year tax. And if you make more or less than the current year, you're either going to have paid in too much or you're going to have a bill due. You need to be talking to your CPA throughout the year if your income changes materially from last year.
Yeah, I take it next level. I tell people ignore the coupons. We're going to do tax calculations throughout the year and we're going to get this really accurate. Those coupons are based on prior old income.
Yes.
So would you get close paying them? Maybe. But let's not guess.
I might have them pay in the first one because we haven't seen the prior year tax return yet, right? Like, or Q1 is normally the hard one because it's just so early in the year, you don't know where you're going to end. So I might make the safe harbor payment, but by Q2, you kind of have a good idea. Yeah.
Do you look at budgets much? I know I personally look at a lot of budgets for myself. I've tracked every single penny that I've spent in 18 years of marriage. I'm one of those
You
guys.
and I are very different on this. No. And first of all,
yes.
I don't call it budget. I like to use the word cash flow. I think it is such a more positive term. So we're going to use cash flow.
Sure. Make it two words instead of one.
Oh, okay. I don't, to be honest. I mean, I do for my clients in the sense of, okay, when we're talking about planning or, planning through the year or how much they need to pay themselves if they're a business owner or whatever, we probably update it as things change. So if they tell me they get a new car, I'm updating the car payment. If they get a new house, I'm updating it's like a living, breathing document that we update it as things update, as their life updates. But I'm not one to, this might surprise you, I don't track like budget versus actual very often. I more track, did we meet our savings targets? Did we meet our goal targets? That kind of tells me if it worked. And if it didn't, we got to do better. I'm much more forward looking than past looking. And I just don't have the capacity to go and see how much I spent on groceries. We did it once where one time my husband and I were like, what is happening? Like, why is our credit card, like we have not been able to keep our credit card in that ideal number in a while. I think it was when inflation was happening. Also the twins started eating, all the things. So we got one credit card just for groceries because we just wanted to test it. It's also 4 times points. So I'll do like those kinds of things, but no, I'm not really detailed like you for 18 years. Absolutely fluffy not.
All right. Well, let me speak to my budget lovers who are listening and viewing.
Cash flow.
Shut up. This is my piece. All right. If you have tracked last year's spending, go back and look and see if it worked. If it did, awesome. What things would you like to change going forward this year? For example, in my budget, I've got set savings items. I save for Christmas. I save for a vacation. and then I spend it whenever those times of year come up. What is coming this year? We have a larger vacation this year. Does last year's savings cover it? If not, need to bump up the savings this year to cover it. Christmas, how did that work? We spent too much at Christmas. We covered it mostly in cash and then in January's surplus. But now I know that I need to save more for Christmas going into this year. So I can cover it with cash and not have to worry about it. So it's just those things of, okay, what can I tweak from last year that makes this year more successful and I don't have to think about it as much because it's all automated.
Oh, I love automation.
And then it flows into the savings goals too. Of, okay, did we hit savings goals? Yes, great. If you didn't, what did that look like? Did you miss them by a lot? Did you miss them by a little? And then you need to reevaluate. If we missed them by a lot, we need to change some stuff. Or if we just missed it by a little, that's okay. We'll just tweak things and we'll get better at it.
And to set savings targets, let's talk about that. I am pretty aggressive. I like 20%. And that means like, I even mean like that's going into investable assets. Like I'm crazy like that. And if you want a blueprint to cover, I'd hope this is not what you're doing, but bare minimum, make sure you're getting your match in your 401k if you're an employee, if you work for someone. I normally max out my clients' 401k first because they don't feel it as much. Then I move on to backdoor Roth, HSA, max out, don't spend, invest, and all the rest surplus to brokerage. That's pretty much my blueprint. If you have all those 4 different accounts, chef's kiss. Like you have so much tax diversification. So, and one of the things on brokerage is every time my husband gets a raise, I think I've said this, we just up our automatic brokerage transfer. Like he's gotten a raise for the past 3 years, but it has not gone to our personal household. So that's how I know that I guess the budget is working per se, I guess you could say, is because when income does go up, I automate it automatically. So, it's not going into our checking account. It's going into Schwab.
Sorry, your what's working? Your budget?
My cash flow? God.
Welcome to the dark side.
But yes. But I think you have to know, this year is going to get interesting for us though, because we have a house remodel. So I have contingencies, but I already know that I'm going to save a certain amount and it's not going to be in that certain amount. And I am prepared that I will probably be margining some of my brokerage this year for those extras. It's
interesting as business owners because I think it's a lot more flexible as a business owner. So if you're a W-2, you know exactly what's coming in each month. You know what you've got to work with in terms of savings. As a business owner, your income can wildly go up or wildly go down, or it can stay flat. So if it goes up, sky's the limit. If you made an extra 100 to 200 grand this year, now you have to sit down and say, well, what am I doing with that? Like, be intentional. Am I going to reinvest in the business? Am I going to pull it out and save it? Am I going to pull it out and spend it? Pretty much, you've got 3 options, or you can give it away. If it stays flat, you really don't have to do anything. But if it goes down, do you have the reserves? Hopefully you have if you've been prudently business planning. But there's just a lot more different scenarios you have to think about as a business owner when it comes to that cash flow.
And also thinking for setting yourself up for 2025. With me hiring this year, that was also something I had to think through. I have someone on payroll now. So I had to I'm upping my business reserve target.
Sure.
Like, I think you have to also review your cash targets because things have changed in your life in probably the past year. Do you have more overhead in your personal life, more overhead in your business life that you need to, stock up reserves?
Cash is king.
To a point. Okay, the other thing that I think I want to say to tell people to review is, if you can, not if you're driving, but log into your investment accounts and please, for the love of fluffing sakes, make sure that you didn't make your backdoor Roth or Roth contribution and it's just sitting in cash. If it says Fidelity Money Market or Money Market or cash, I see this a lot. People contribute to their retirement plans, like their business retirement plans or their Roth. And they think when they contribute, it goes automatic, like an employer 401k. That's not the case. So if you please just make sure that you don't have a lot of cash sitting in your investment accounts.
Yeah, that's a big one. I left one job, rolled the 401k to a Roth IRA. This was like 12 years ago.
Oh, no.
And didn't look at it. It was all in cash for a year. It was one of those palm to the forehead moments.
What year was this? What year was this?
I don't know.
Was it a big stock market year? Was it like a bull year or a bear year?
Couldn't tell you.
You don't remember.
So long ago. Life has thrown so much at me. Question, when you were saying that when your husband gets a raise, all of it goes in the brokerage account.
Mm-hmm.
Question on lifestyle creep. What if you needed to increase lifestyle? Because I actually don't think lifestyle creep is a bad thing to an extent. Like if you were to get say a $20,000 raise for the year, I would hope some of that goes into increasing some of your lifestyle and some of it goes into savings from a general person's perspective.
We do it with my business because it's easier. That's how the lifestyle creep has honestly happened, because we can be more intentional about it, because I just do it. I think with payroll, for some reason, right? Like I was talking about this. If even you make $2,000 more a month through payroll, it's so easy to have that absorbed really quickly into mindless spending that you might not notice and look back on and be like, where did that $24K in a year go?
Yeah.
Whereas my business, I do my distribution once a month. I'm sure you do the same thing. I do my numbers only once a month, end of the month. Mm-hmm. I put money aside for taxes, make sure there's enough buffer, pay my business credit card off, and then see what's left over after reserves and everything, right? And it's normally some lump sum. Now I know what I pay for my household. I'm in charge of like the kids' school, the nanny, and anything really extra outside of our cash flow. That's what we set up. Like my husband's salary, we have it where he has to cover the mortgage and living expenses. But any of the extra things we want to do, like our house remodel, big travel, whatever, comes from our business outside of the kid stuff. And so because I have it set up this way, we determine, okay, what do we have any really big thing we want to do? Otherwise it goes to brokerage. Right now, pretty much all of it is going towards the house remodel. But in previous years, that's kind of how it worked. And I should also preference, I max out my solo 401k every year. So I don't really have a lot of guilt. And that's just what it works. I think that's why it's personal financial planning. With my business, it's so hard because it's so variable. Some months distributions are much lower than some other months because some clients pay quarterly. I might take on a new client. Like it's not stable. And so it really takes the pressure off of our household that we don't rely on it as much. That's kind of the fun money. And so we actually base like how much we're going to travel and stuff like that off of that. I know it's weird, but it's for us.
And I think that's awesome because it's a personal design that fits your family and it works. For other people, if they hear what you guys do, they're like, that just wouldn't work for me. Like I can't wrap my head around that. And so they come up with a completely different plan that works for them and they make it work. And that's the beauty of this whole thing.
Well, do you know in life planning, like the registered life planner, like the RLP, that's what it actually taught me is like, George Kinder was like, hey, you want your clients to come up with their plan on how to solve the problem. You don't want to just say it right away because how they might solve it might be a completely different way than you might solve it. And if they come up with the idea, they are way more likely to implement it. And that's what we care about the most, right? We want our clients to succeed. So, again, that's why it's called personal financial planning. I will come up with ideas, of course. I'm not like a mute. They're not paying me to not be a mute, but I will first see what ideas they have before I give my own, I should say.
Yeah. You're not the therapist of saying, well, what do you think?
Oh, gosh.
And the psychotherapy answers of, well, how did that make you feel? What do you think is the answer? No, that doesn't work.
I think
Anyway,
my clients, if I acted that way, they would just exit the Zoom meeting.
what am I paying you for?
Beep. Cancel. Yeah.
Yeah, I guess to close up on that lifestyle creep thing, I like to put parameters on it. Just like we say, if you're investing for retirement, make that a goal of 15 to 20% of your income, assuming you don't have a pension on the outside. I think for lifestyle creep, let's say you got that $50,000 raise. I like to do 10% of saying, okay, put 10% and just have a great time. Like increase your lifestyle, go on a good vacation. Well, that leaves you $40,000 to figure out, okay, how can I improve my future with this? Whether that's throwing it into learning more, throwing it into savings, opening a business, whatever, but you're just not letting it sit there with no intentions. It's all spent deliberately and positively.
And be intentional, though. I think that that's why we're talking about setting up for your wealthy 2025. Have goals. Know what you would want to change about your lifestyle. Because if you just have the 10% and you don't really know what you would change, I don't think you're going to get a lot of value out of that 10%.
Yeah.
Yeah. Well, I have a question.
Yeah.
This is your first month, so I know the Grant household got an increase in lifestyle for fun budget, right? I think we talked about this. Has it been spent yet this month? How did it go?
Well, we work month in arrears. So our January, once we've done that all, we figure out what the surplus is, and then we take that into February, and then we figure out what to do.
So we don't know yet.
Not there yet.
Okay.
In my mind, it's going on the Trump meme coin, and we're shooting to the moon. We're going to get rich off Trump's coin, and then we're going to move that into Melania's coin, and we're just going to accelerate our financial goals. Disclaimer, we're not doing that.
Okay, you scared me. I was like, what? You? Mr. Risk Averse? No way. Is there really a Trump meme coin? Is this a real thing?
Mm-hmm. Yep.
Oh, dear gosh.
He released it just before he went into office.
Oh, dear gosh.
Shot up and shot back down again.
Oh, dear gosh. Okay, I'm going to have to watch something.
Come on, crypto bros. Gotta know these things. All right, we're going to jump into our next segment. It's called What Would You Do? This is where we jump into answering questions. Heather, I'm going to shoot number 1 at you, and you can tell me what you think. As we moved into 2025, my spouse and I realized that we are on track to spend a lot more per month living our best life. How does that impact the amount of cash we need to hold?
Right, they need to have more in reserves. Spend a lot more per month living our best life. I'm proud of them. I love hearing people live their best life. But I think you need to hold more cash because your living expenses just went up, it sounds like. And I think the question, I'm really good at asking questions, I'd say. Are they fixed or are they variable, right? Like, are you locked in on those expenses? Because if you are, you need to hold a lot more cash. Or are the per month expenses, if they're going up, are you able to flex down if, I don't know, income dries up, things like that? Those are the things to really think about. And also the hard question, would you be willing to flex down? Like, do you know yourself? Would you cut them? And if not, you need to hold more cash in reserves.
I think that's the big one right there. Are these fixed or variable expenses when you talk about living your best life? Because then that changes the answer to the question.
Yeah, like if it's you're buying a bigger house and you've locked yourself into a mortgage that's higher, you need a lot more cash.
Talking to the grants right there.
Mm-hmm.
All right, you got number 2.
All right. My goal every year is to increase my retirement savings by 5% of my income. Is that a good idea? Yeah, I mean, yes.
Yes.
But
it's a weird way to look at it in terms of increasing your retirement savings by 5% of your income. I would work out the number of, okay, well, what is 15 to 20% of my income this year, and can I save to that amount? And if your income goes up by 5% next year, just increase the number again. But you're not going to do this in perpetuity. You're not just increase your retirement savings 5% of your income if your income is static, because then it's just going to go in perpetuity and you're going to save 100% of your income after some point. That's not right. So your goal is going to get to 15 to 20% of your income. Why we say that 15 to 20% is some people have pensions, some people don't. Some people have spouses, some people don't. So the more you don't have in your situation, the higher that savings amount needs to be. So if you're married, you can tend towards that 15%. If you have a pension, tend towards that 15%. But yes, to increase your retirement savings up to a point is good. After that, you're saving too hard for that goal. You need to take your foot off the gas and apply that money elsewhere. Question 3. I retired 2 years ago. You're in the wrong podcast, sir. That's next week's. Anyway, we'll take a question. I retired 2 years ago and I'm living off my portfolio. As the stock market has gone up a lot in that time, what should I be reviewing in my portfolio?
Oh, such a good question. This is a really good question. This is long.
Top 3 things.
Okay, well, one, I would see, are you with how the stock market has gone in the last 2 years, most of my clients were too top heavy in US growth stocks, right? So large cap. So you probably need to rebalance. And if you've been living off your cash or fixed income, you probably need to rebalance. You probably need to review your buckets. I also would say if you're living off your portfolio in the last 2 years, you've experienced pretty dramatic inflation in this country in the last 2 years. So you also probably need to re-review your withdrawal rate based on and how much you need from that portfolio every year, and your fixed income and cash buckets, and then you do the rebalance. But I think there's a lot to do.
Especially if you haven't looked at it in those 2 years. It's probably skewed way heavy at that point into
and you
equities.
Got to be careful of taxes if it's all in brokerage too. They might not be able to rebalance as much.
Highlights. Personal win of the week. Let's go.
I had my girls' trip. It was amazing.
Tell us more.
Well, so I plan it with this. It's the 2 bougie girls of the group. I'm one of them, and then there's another one. And we always plan because that's the only way we'll go. It has to be nice enough digs. I mean, it was amazing. What was so shocking for me is I slept for 3 hours on the day that we hung out at the house. Like, I got a massage. We have masseuses come in. We have a chef. It's like really amazing. It's like a day where you don't leave and everyone comes to you. We had a yoga instructor. It was incredible. But anyways, I slept for 3 hours. I didn't realize I was that tired. It's amazing what happens when you're not I didn't touch my computer for a few days. It's also a lot of talking. I love these females, but it's a lot of thinking and a lot of we really get into it. But yeah, I feel great. That was my personal highlight.
You really explored with the ladies.
Yes.
Sounds like.
Yes.
Guys do that in about 3 minutes. The deepest question is, so how you doing? You good? Yeah, I'm good. Great. Let's talk about sports.
If you were even in that room, you might have ran.
I like the deep conversations. I was a psych major. I like going into psyches and why people do the things that they do.
Oh yeah, we get deep. There's tears, there's giggles, there's laughs. It's very authentic. It's awesome. That's why I love this girl group so much.
Yeah. Oh, that's good.
Yeah.
All right. This is going to out me for my personal highlight of the week. So the last week, TikTok got banned. That kind of dates you on this episode. I love TikTok. I really enjoy it. I spend a lot of my leisure time watching videos and researching stuff through it. When it got banned, I actually had an emotional reaction to it. I was upset that it was gone. I was actually angry of the government overreach that they could ban something that allows free speech, regardless of their reasoning to it. And I was like, wow, didn't realize I'd react like this. Then I spent the next 12 hours thinking, okay, now I don't have this distraction. How can I be more productive in life? And was planning out all these things I could do with the hours I have back. Then TikTok came back and I threw that all out the window. And now I'm back to living my ideal life of scrolling and doom scrolling through videos.
Wait, so what was the list? Are you going to do any of that list?
Maybe. Depends.
Okay. All right. Well, I'm happy for you. It's back.
I'm happy as well because I was not going on to Instagram. I'll tell you that.
For now. It's back for now, right?
It's TikTok or die. Anyway, I don't need people thinking differently of me because of my own personal habits online.
You just outed yourself. You've outed yourself. It's out.
It was the hills last week. Now it's my deep love of TikTok this week. I'm going to be banned come 2 months from now just because of what I'm saying about myself.
You make me look so good.
That's my job. All right, that's our podcast for this week. So thank you for listening to this episode of Playbook of the Wealthy. You can find us on whichever platform you listen to podcasts, and the video version of the show is on YouTube, Instagram, and LinkedIn. You notice I didn't say TikTok because compliance won't let us on there. If you want to send an email to the show, contact us at hello@playbookotw.com. And we'll see you next time.
Bye-bye.